Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices. After an early dip, we saw gold prices retrace back to roughly where they went out on Friday. So kind of one of those zero-sum days in metals where we saw after a big number on Friday, the market kind of sighs relief. We saw gold prices really not do a whole lot late last week either. But again, we saw a dip this morning, rallied back up, so unchanged. And market kind of waiting for that next moment. And if you look at the dollar really didn't have a play again today. Dollar was lower, traded back to those pre-employment levels. Recall we saw the dollar starting to catch a little bit of a bid, and I say little bit because it really was just that, and it was very short-lived. But now we're trading back into last week's range, and the dollar really not playing any part of a role here. So with gold kind of back to unchanged, the dollar trending back towards those lower levels, we come to inflation. And CPI tomorrow should be the underlying tone of the day for gold. I think that right now there's a couple ways to look at inflation data that we get tomorrow. One is if it comes in as, kind of as is, maybe a little weaker, the market will take that, and we'll certainly see gold prices go higher, I would think, with the idea that the Fed maybe can't use inflation after Friday's lower than expected wage inflations, that average hourly earnings, that maybe inflation isn't going to be as much a problem. We're seeing that in the equity markets with the NASDAQ spiking to all-time highs as well. So right now, it seems to me that inflation might not be the story. But if there is a high print for inflation tomorrow, I think that that's a buying opportunity as long as gold stays above 1,300. 1,300 is kind of the line in the sand with 1,297, the 200-day right below it. So I'm looking to buy gold on any dips with the idea that even if we do see moderate inflation tomorrow, that it is long-term, we're not going to see it the way I think that it's going to cause the Fed to be uber hawkish, especially not uber hawkish at the March FOMC. So right now, gold trading neutral, looking for more bullish outlook after this week, but possibly getting so on a pullback, maybe be able to buy gold on a discount. This is Todd Colvin coming to you from the floor of the CME Group.